Welcome to Global West. Please subscribe and hit the bell icon for more breaking updates. For decades, the petrodollar system made the US dollar the heartbeat of global energy trade. Every barrel of oil that crossed the oceans was priced in dollars, binding the world's most vital commodity to America's currency. This arrangement didn't just shape the flow of money, it shaped the very architecture of global power, giving the United States a unique advantage in international finance and diplomacy. In the 1970s, a historic handshake between Washington and Riyadh sealed a deal. Saudi Arabia would price its oil exclusively in dollars, and in return the US would provide military protection and political support. This pact was more than a transaction, it was a strategic alliance that would echo through the decades, anchoring the global economy to the dollar. The result was profound. With oil sales locked to the dollar, countries everywhere needed greenbacks to keep their economies running. This relentless demand allowed the US to borrow cheaply, run persistent deficits, and finance its ambitions at home and abroad with little fear of economic backlash. The petrodollar pact shaped not just markets but alliances and rivalries. It reinforced American economic dominance, influencing everything from international summits to the balance of power in the Middle East. The dollar's supremacy became a pillar of global stability and sometimes a source of tension. But the world has changed. New powers have emerged, technology has transformed energy markets, and the old certainties are fading. The once stable foundations of the petrodollar system are now being tested by forces no one could have predicted 50 years ago. China, now the world's largest oil importer, is flexing its economic muscle. Its appetite for energy is reshaping trade routes and challenging the dollar's monopoly. Meanwhile, other rising economies are seeking alternatives, eager to assert their own influence on the global stage. Gulf nations, once firmly in Washington's orbit, are diversifying their partnerships. They're forging new ties with Beijing, Moscow, and beyond, no longer content to rely solely on American promises. The Middle East is becoming a crossroads of global ambition, where old loyalties are being re-examined. The US-Saudi relationship, once unshakable, is now marked by tension and uncertainty. Riyadh is openly questioning the reliability of American security guarantees, while Washington debates its own interests in the region. The trust that once underpinned the petrodollar is eroding. The incentives that held the petrodollar together, mutual benefit, shared security, and economic stability, are unraveling. Volatile oil prices and shifting alliances are shaking the foundations of a system that once seemed unbreakable. In boardrooms and royal courts across the Middle East, leaders are re-evaluating old alliances and exploring new strategies. The future of energy, finance, and geopolitics is being debated behind closed doors, with the stakes higher than ever. The once unchallenged petrodollar now faces its greatest test, not from war or revolution, but from the relentless march of global economics. Competing currencies, new trading blocs, and digital finance are all vying for a place in the new order. The era-defining pact that bound oil to the dollar stands at a crossroads. Its unraveling could reshape the world's financial landscape, leaving us to wonder what comes next when an oil-stained pact begins to fade into history. China has emerged as Saudi Arabia's strategic partner, not just a customer. Vision 2030 drives Saudi Arabia to diversify, and China is eager to invest, build, and share technology. Chinese firms are constructing mega-projects like NEOM and launching joint ventures in electric vehicles. The partnership is deepening, economically, politically, and culturally. Qatar and the UAE are also strengthening ties with China, settling energy trades in Yuan. China even brokered a diplomatic breakthrough between Saudi Arabia and Iran. Saudi schools now teach Chinese, signaling a long-term commitment. The Gulf is pivoting east, welcoming China as a partner for the future. The dragon is no longer a visitor in the desert, it's here to stay. Trade between China and the Gulf is booming, transforming the economic landscape of the region. Once dominated by Western partners, the Gulf is now looking east, forging deeper ties with China at an unprecedented pace. Massive container ships glide into bustling ports, carrying everything from electronics to energy supplies, symbolizing a new era of cooperation and mutual benefit. The numbers are staggering. Trade between China and the Gulf is projected to reach nearly $1.9 trillion by 2035. This surge is not just about goods, it's about influence, investment, and the shifting balance of global power. Financial charts and headlines tell the story of a partnership that is rapidly outpacing old alliances. China has now become the Gulf's top trading partner, overtaking traditional players and creating strong incentives to use local currencies instead of the US dollar. High-level meetings and business deals are now routine, as both sides seek to deepen their economic integration and reduce reliance on Western financial systems. In 2023, a landmark agreement was reached when China and Saudi Arabia signed a currency swap deal. This allows direct trade in Yuan and Riyal, bypassing the dollar entirely and making transactions faster, cheaper, and more secure for both nations. The Bank of China has opened a major branch in Riyadh, signaling a new chapter in financial cooperation. Stock exchanges in the region are linking up with their Chinese counterparts, making yuan-based transactions easier and more accessible for businesses and investors across the Gulf. This is part of a broader global trend. Countries around the world are seeking alternatives to the dollar, wary of the risks posed by US sanctions and the desire for greater financial independence. Leaders are gathering at summits discussing new frameworks for trade and finance that reflect a multipolar world. The Gulf's financial infrastructure is being rewired from the ground up. New technology hubs, modern data centers, and innovative banking systems are emerging to support the demands of this eastward shift in commerce. The region is investing heavily to ensure it remains at the forefront of global finance. The dollar's long-standing monopoly is fading as commerce and capital increasingly flow east. Trade routes are being redrawn, and the symbols of global trade are changing from USD to CNY, reflecting a profound transformation in the world economy. Quietly but steadily, the global financial system is being re-engineered. Behind the scenes, servers hum and data flows, connecting markets and banks in ways that would have seemed impossible just a decade ago. The world is watching as the sands of commerce continue to shift eastward. The petro-yuan is no longer a theory, it's becoming reality. For decades, the US dollar has been the undisputed king of global oil trade. But now, a new contender is stepping onto the stage. China's ambition to internationalize its currency is reshaping the rules of the energy market, and the world is starting to take notice. In 2023, the first crude oil trade was settled in China's digital currency, the eCNY. This landmark transaction marked a turning point, showing that digital currencies can play a real role in the world's most vital commodity markets. The eCNY's use in such a high-profile deal signals China's determination to challenge the status quo. Saudi Arabia joined Project M-Bridge, a multinational initiative to build digital payment rails for cross-border trade. This partnership is more than symbolic. It's a practical step toward a future where oil and other resources can be traded instantly, securely, and without relying on the dollar. More energy deals are being priced in yuan, especially as China is Saudi Arabia's biggest customer. The growing economic ties between these two giants are accelerating the shift, with other countries watching closely and considering their own moves. The shift is gradual, but each yuan-based contract chips away at dollar demand. Every new deal settled in yuan is a small but significant step toward a more multipolar financial world where the dollar's dominance is no longer taken for granted. The US can no longer rely on the world to absorb its deficits by default. As more countries diversify their reserves and payment systems, America's financial cushion is thinning, raising questions about the future of its economic influence. The petro-yuan's rise signals a real challenge to American financial dominance. It's not just about currency, it's about who sets the rules, who benefits from global trade, and who holds the levers of power in the 21st century. This isn't just about currency, it's about global power. The world's major economies are now engaged in a high-stakes contest where financial innovation and strategic alliances could redraw the map of global influence. The energy market is entering a new era. As technology and geopolitics collide, the way we buy and sell oil, and the currencies we use, will never be the same. The world's financial foundation is shifting beneath our feet. The rise of the petro-yuan is just the beginning of a transformation that could reshape the global economy for generations to come. The yuan's rise is part of a broader movement. BRICS is expanding, now including Saudi Arabia, the UAE, and Iran. This new BRICS Plus bloc controls a huge share of global oil and gas, giving it major leverage. The West's use of sanctions has pushed these nations to seek alternatives to the dollar. China's CIPS system and talk of a BRICS currency are steps toward financial independence. The expanded BRICS provides a platform to coordinate de-dollarization. With the Gulf on board, the bloc is reshaping the rules of global finance. The dollar's reign is no longer absolute. a new financial order is taking shape. The petro-yuan's rise faces real obstacles. The dollar's dominance is underpinned by deep, liquid markets and global trust. China's yuan isn't fully convertible, and capital controls make investors cautious. Saudi Arabia's rial is pegged to the dollar, providing stability that yuan payments could disrupt. U.S. financial markets remain unmatched for safety and scale. For now, the Gulf still needs the dollar to invest its oil wealth. The shift away from the petrodollar will be slow and incremental. The journey from Riyadh to Beijing is long with many hurdles ahead. The petrodollar's era of absolute supremacy is ending. The future is a multi-currency world with the dollar sharing the stage. The petro-yuan will anchor China's sphere of influence, while other regions use their own currencies. Local currency trade is accelerating from India to Russia. U.S. power will be more constrained as alternatives to the dollar grow. Sanctions will lose some bite, forcing new diplomatic strategies. The world is moving toward true financial multipolarity. For most people, the change will be gradual but profound. We're witnessing a historic shift, one that will redefine global power. The sun is setting on the unipolar financial world, and a new era is dawning.